Let's talk about the high yield savings account. If you don't have one, you're leaving money on the table. I think we can all agree that interest rates are going to stay elevated for quite a while, so why not take advantage of it? With that question in mind, I want to dive into why I think the high yield savings account should be a staple in everyone's financial plan. Interest rates are really high. Historically speaking, maybe not, but after over a decade of low rates and just general cheap access to money, the speed at which rates were raised has put us in a financial bind. Mortgages are up, auto loans are up, and all other forms of borrowing are too. But high interest rates work both ways. It just depends on if you're acting as a borrower or as a lender. When you deposit your savings into a bank, you are essentially lending that money to them. They're borrowing from you so that they can put that capital to work and earn returns on other financial products. So with interest rates being high, the cost of borrowing has gone up, and if the bank is borrowing from you, they're going to have to pay that new fair market price to do so. Enter the high yield savings account. High yield savings accounts offer above market interest on deposits that, as of now, is in the 4% range. Your typical savings account, on average, will earn you only 0.42%. That's right, not even a single percentage point of earned interest for lending out your savings. The difference between the two is substantial. Let's say you had $10,000 saved up. If you held it in a basic savings account, you'd earn on average $42 a year. But if you opted to use a high yield savings account, you'd earn north of $400 a year. That's over $350 more for the same amount of savings. So that right there is the principal reason to use a high yield savings account over your traditional options. But that's almost too easy. So what's the catch? Believe it or not, there really isn't a catch at all. The reason certain banks are able to offer high yield savings accounts is because of the bank's business model. Most, if not all, of the banks offering above market interest are online banking institutions, meaning they don't have brick and mortar branches. Because their overhead for office space and administration is virtually zero, these online banks earn insanely high margins on their services. And that's how they can afford to pay you higher interest on your deposits. I guarantee you, they're making higher profit margin than the 4% they pay you. Now, with all of that said, there are things to be aware of when selecting a high yield savings account, specifically the requirements and fee structure of having one. First, there's a grandfathered in mandated limit on the amount of withdrawals you can make from your account, set to 6 a month. Banks technically don't have to limit you anymore, but most do. I'm sure it has something to do with keeping their deposit outflows more predictable. The next thing to pay attention to is minimum deposit requirements. Competition amongst the banks has pushed many of them to have no minimum requirements, but some still set the dollar amount anywhere from $100 to a few thousand. I think that's just unnecessary, and avoid it if you can. And the last thing to watch for is maintenance fees that are usually charged on a monthly basis. These fees can really kill your overall return, especially for small savings accounts. Look for zero fee accounts, no need to pay a bank more than you have to. As for picking which bank to open an account with, I like to use sites that do the comparisons for me. I've always used NerdWallet as the starting point of my research, and as you can see, there's plenty of options with high interest rates and no minimum deposits required. You could always start your research organically, but I've had the pleasure of interacting with NerdWallet's founder in a class setting. And I gotta tell you, I buy into their mission of bringing transparency to financial services, so I use them often. Now let's tackle how I like to use the high yield savings account in my overall financial strategy. And this will be slightly different for everyone based on their financial goals. The very first thing I use my high yield account for is to house my emergency fund. This is money that I hopefully won't need anytime soon, but it needs to be extremely accessible. If I were to be faced with some unforeseen emergency expense, I want that money as soon as possible. And here's the key: at the full value of what I deposited. Here's why I emphasized full value. I'd never house my emergency fund in an asset whose short-term valuation varies. I could put it in stocks, but at the risk of it being worth 50% less at the point I need it for an emergency. Even bonds aren't guaranteed to hold their value unless you hold them to maturity. In a high-yield savings account, your emergency fund is accessible, your principal is preserved, and you're earning a very solid 4% on the money until the unfortunate day that you need it. The next way I utilize a high-yield account is to store the money I intend to use on a big purchase within a few years' time. This includes down payments for real estate, vehicles, and any big-ticket items, say vacations or studio equipment. The reasoning is exactly the same as why I use a high-yield savings account for my emergency fund. I need that money to be available the moment it's required, without the risk of losing value in the short term. Let's run with buying a vehicle as an example, since I'm still in the market for one. I currently have the down payment in a high-yield account because I anticipate making a purchase by the end of the year. Now imagine if I took that down payment and invested it in the S&P 500 instead. The idea being I could possibly earn a higher return than the 4% interest offered by the high-yield account. Here's the problem again. No one truly knows where the stock market will be in 3 or 4 months. Hell, no one truly knows where the stock market will be in 1 year, 2 years, 3 years' time. There is zero guarantee that the down payment I put in the S&P 500 gains or even holds value by the time I've found a good deal on a vehicle. What happens if the market falls 20% over the next 4 months? Well, I better pray car prices fall 20% too. The underlying principle here is about market timing. Does the stock market and other investable assets like bonds offer the potential of higher returns? Absolutely. But when those higher returns are realized is mostly unknown. Because no one can accurately time the direction of financial markets, why would you expose money you may need tomorrow to downside risk? With a high-yield savings account, you know that money will always be there, and exactly the minimum amount it will be worth. There's no market timing involved, there's no buying and selling assets. It's very much set it and forget it. The last way I use my high-yield savings account is to act as a pseudo bridge for my weekly investing. Now that I'm hearing that out loud, I'm not entirely sure that makes sense, so let me just describe what I mean step by step. I invest a fixed dollar amount in the stock market every week according to my investment schedule, but I receive a paycheck bi-weekly. So 2 times a month, I have this lump sum of funds that will eventually make its way from my bank account into my brokerage and then invested. But rather than keeping those funds sitting in my checking account where it earns nothing, or sitting in some money market fund through my brokerage, I put it in my high-yield savings account. And the reason I do that is because most of them accrue interest on a daily basis. So even if those funds are in there for 1 to 2 weeks, it's still contributing to the overall interest I'll earn for that year. The way I see it, might as well do something with it than nothing. And in my experience so far, the 6 withdrawals a month hasn't given me issues. I simply don't withdraw money for anything else but moving it to invest. This has also saved my ass a few times because in addition to my planned investments, I'll invest even more if I feel my expenses for that month will be lower. But sometimes I miscalculate and overinvest with money I need to pay a bill. So I just pull from my high-yield savings account and replenish those funds on my next pay period. Ever since I hit a certain level of savings, every additional dollar I can put away is just invested. I'm really trying to reach a point where 80 to 85% of my net worth is made up of invested assets. Right now, that number is closer to 60. So with that said, the high-yield savings account is a great incentive to hold temporary cash during that process. And that about sums up why I think you should consider a high-yield savings account and how I personally use it in my financial strategy. If I had to boil it down to a single sentence, above market interest earned on accessible dollars. So don't leave money on the table. That's all I have for this video. If you enjoyed the video, I invite you to subscribe to the channel, or consider starting a discussion in the comments. We talk about everything related to money, from personal finance to entrepreneurship. As always, thanks for watching. Until next time, take care of yourself, and best of luck.